Welcome to the Fear and Greed Business News Afternoon Report for Wednesday, the 8th of May, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed up just a touch today to 7,805 points. Not too bad, considering the 1.4% surge yesterday. Industrials and tech stocks did best, while the consumer discretionary index was the weakest. Really, it was a bit of a lacklustre day. Among the large caps, ANZ jumped after its underperformance yesterday. Santos was also up more than 1%. Worst for the large caps was Rio Tinto, which dropped 1.2%. In corporate news, Singapore's Olam Group has lifted its takeover offer for Namoi Cotton for the second time in less than a week as it battles for control with Louis Dreyfus. Olam said it is willing to pay 70 cents a share for Namoi, trumping a revised offer of 67 cents a share lobbied by Louis Dreyfus just 24 hours earlier. Now, the Olam offer is conditional on securing at least 50.1% of Namoi's stock. Louis Dreyfus has a 17% or near 17% blocking stake. Therefore, Namoi just wants 50.1%. And real estate portal Domain says group revenue jumped 17% in the March quarter and flagged higher operating margins this year. Investors weren't impressed and Domain's share price fell nearly 4%. Story number 2, Prime Minister Anthony Albanese today said China has admitted the Australian helicopter it fired flares in front of was in international waters. Australia has protested to Beijing that a Chinese fighter jet endangered an Australian Navy helicopter over the weekend with flares over international waters. Mr. Albanese said wording used by Chinese authorities in communication with Australia, particularly by saying that the Chinese fighters were near Chinese airspace, is confirmation that the Australian Defence Force personnel were both in international waters and in international airspace and were undertaking work on behalf of the international community enforcing UN sanctions against North Korea. The Chinese Foreign Ministry has accused the Australian Navy helicopter of flying within close range of Chinese airspace in a provocative move. Story number 3, property sector leader Goodman Group has upgraded its earnings guidance for the second time this financial year, even though it said global demand for warehouse space is weakening in some markets like China. Goodman is an industrial property company, big in logistics and warehouses, digital infrastructure and the like. It owns, develops and manages property, often with other big investors. Its share price did very well in the decade before COVID, soared in the COVID years, came off somewhat, and then it's done even better. In fact, since late 2022, it's doubled its share price. Goodman manages many sites and has lifted its assets under management above $80 billion. It's still seeing rental growth and warehouse demand, but what investors like is its $50 billion push into data centres, which is benefiting from the growth of AI learning and cloud computing. 40% of Goodman's $13 billion of work in progress is now data centres. Chief Executive Officer Greg Goodman said China is weak due to overinvestment, but the company has enough going on to stay pretty busy for the next 5 years or so. Story number 4, less than 2% of documents in the MyHealth record system are being looked at by doctors with incomplete records, poor interoperability and clunky usability, hindering patient and clinical use of the $2 billion federal portal. That's according to a new Productivity Commission report. It says MyHealth record was intended to be a central access point for a patient's most important health data, but it continues to be plagued by incomplete records and poor usability. According to the Financial Review, the report says there's an estimated $5.4 billion of benefits from getting the MyHealth record working for clinicians and patients. There are now 23 million records with 1.2 billion documents on the federal portal, but the report said only a fraction are being accessed by clinicians. And story number 5, the federal government will spend $566 million over the next 10 years to map Australian resources, both onshore and offshore. When making the announcement today, Prime Minister Anthony Albanese said he was surprised it hadn't already been done. The idea is that a complete map of Australia will provide information about where critical minerals are, what's under Australia's earth and waters. It could identify sites for carbon capture and storage projects and clean hydrogen projects. The funding means resourcing Australia's prosperity will be fully funded for the next 35 years. Mr. Albanese said Australia's top geoscientists will be deployed to map Australia's resources. That's it for the afternoon report for Wednesday, the 8th of May, 2024. Michael Thompson and I will be back tomorrow morning with the Thursday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.